Silver's price has risen more than 40% over the course of the past year, a move that could leave you wondering, is it too late to stack silver? Well, today we'll examine whether the silver bull run still has some room left to go, and we'll take a look at some charts and try to determine if the silver price could really rally to $50 per ounce and beyond. So, let's get to it. Did you know SD Bullion is giving away a monster box of 2024 Tree of Life silver coins? Sign up today at sdbullion.com/sweepstakes. Hey everybody, Smart Silver Stacker here. Hope you're doing well. And as I mentioned in the introduction to this video, the silver price has been on an absolute rip over the past year. It has risen more than 40%. At the time I'm recording this video, the silver price has risen to more than $34 per ounce. And the factors that have contributed to silver's rise are multiple. You have got the looming debt crisis here in the US and massive expansion of debt at the federal level, now exceeding 35 trillion, soon to hit 36 trillion. While we are running multi-trillion-dollar deficits, no end in sight of that. So that basically guarantees that the debt will continue to exponentially rise. Simultaneously, you have a skyrocketing interest cost of this surging debt. The interest on the national debt now exceeding $1 trillion per year. This will soon become the largest item on the federal budget. And this all means that the Federal Reserve is going to have to print a lot of money. That's probably why this is occurring against a backdrop of the Federal Reserve returning to an easy monetary policy. They are now cutting rates despite the fact that inflation remains a persistent problem, and it will likely be unleashing a new wave of inflation on the U.S. economy. So that, I believe, is one factor that is contributing in a very big way to silver's rising price. At the same time, you've got skyrocketing geopolitical tensions, so silver's role as a safe haven asset makes it very appealing at these times. You've even got the recent announcement from the Russian State Investment Fund that they are purchasing silver for the first time in history. And this is all related to the current spate of de-dollarization around the world from the BRICS nations and others. But even more important than the factors that I just listed for the silver price may simply be the basic economic laws of supply and demand. Currently, the demand for silver is outstripping the production. In fact, for the past several years, every year we have consumed hundreds of millions of ounces of silver that has not been replaced by mining and recycling. And this dynamic will continue to lead to a decreasing above ground available supply of silver until production is incentivized by much higher silver prices. Demand for silver continues to rise from applications such as photovoltaics, green energy, and new technologies that are being announced, such as Samsung's solid-state battery, which is set to enter mass production by 2027. It's going to revolutionize electric vehicles and battery technology. And what does it use? Well, it uses silver in order to accomplish that. Because silver, the thing about silver is it is the most conductive element of both heat and electricity on the periodic table. So for many of these applications, there's really just no substitute. But this supply-demand dynamic that we are aware of from the official numbers, that we are consuming more silver than is being produced, it could actually be a lot worse than many of us realize. There was the late, great Ted Butler, for example, who believed that the COMEX and JP Morgan were double counting silver in their vaults to the tune of something like 100 million ounces. There were reports last year published in the Wall Street Journal regarding an LME warehouse that was supposed to be holding 54 tons of nickel, but instead it turned out to just be a bunch of rocks. So when you hear the numbers from these exchanges and telling you how much silver they have, you have to be a little circumspect about that. And that's no surprise given the fact that over 400 paper ounces of silver are traded for every single ounce of the underlying metal. And the reality is that that ratio might be a lot more extreme even than that. Now, when I mention this, people frequently like to say that there's no shortage in the comments section. They'll post it in all caps. They like to cite the fact that silver is still available to retail investors and that coin shops and online dealers are loaded up with metal. And while that is true, that's not such a sign that there's not a deficit in the silver market. It's just a sign that retail investors have not yet gotten on board for this silver bull market. And I think that is a big indication that this still has a long way to run. When silver is peaking, you will notice that stuff like this, junk silver half dollars, for example, this is always one of the first things to dry up when retail investors pour into the market. This will not be available at dealers. But right now, ST Bullion has got this stuff on sale for $1.49 over spot. And that is simply a sign that retail investors just haven't gotten on board yet. And when they do, this is going to be what you want to have. Not paper silver, not futures contracts. You're going to want to have the real physical metal in your hand. And, it's not financial advice, but junk silver might be a good thing to acquire as well, because, they can always mine more silver, but they'll never mint another pre-1965 90% silver US coin. And yes, it is true. I understand that there are large silver inventories out there in the form of jewelry and silverware and bullion held by private investors. But the thing about that silver supply is that while it is there to be unlocked, it will require much higher silver prices to entice sellers to come into the market and liquidate that metal. So for all of those fundamental factors, I believe that the silver bull market will continue. But let's take a look at some charts and see if there's a technical case for silver's continued breakout. So one of the things we need to look at is this cup and handle formation that dates back to 2011. Now, this is a very bullish chart. You can see that back in April of this year, we broke out of the handle, and that was really when this big upside move really kicked off in the silver market. But then potentially an even more compelling chart is another cup and handle formation that appears when you zoom out on the silver chart back to 1980. And when you look at this, you realize that the cup and handle formation that dates back to 2011 is in fact the handle of the larger cup and handle formation. And really, it's hard to emphasize how bullish a pattern on silver's chart this really is. Now, how high will silver go now that it has actually broken out of this pattern? Well, this is an excerpt from Investopedia, which describes how to determine a profit target for a breakout from a cup and handle pattern. And they say that a profit target is determined by measuring the distance between the bottom of the cup and the pattern's breakout level and extending that distance upward from the breakout. Now, if you examine the chart that goes back to 1980 and you do the math, the bottom is just under $4 in the mid-1990s. The breakout point is around $26 in April of this year. So according to Investopedia, what you would want to do is subtract 4 from 26. So that gives you 22, and then you add that to the breakout level of 26. This gives us a price target of $48 per ounce. So even though silver has been on a real rip, I don't think it's too late to start stacking. And I think it's important to emphasize that that $48 an ounce price target is likely a very conservative one for how high silver could go. Keep in mind that silver hit $50 back in 1980 when the dollar was worth a lot more than it is today. In fact, if you inflation adjust that price high alone in today's fiat currency. And for all of these reasons, I do not think that even though silver has been on a real rip, it's too late to get involved and get into this market. In fact, I think it's more important than ever. And really, for those of us who have been stacking, say, for over a decade, like myself, waiting for this moment, I'm almost a little envious of anybody who starts stacking right now, because you're probably going to get in right before the big move higher. And I think it's just very important to emphasize that, even though silver is moving up, the trend is higher. And I feel like now is a great time to get metal, especially because of all the factors that I listed. I mean, you need some physical bullion and insurance policy without counterparty risk more than ever, given the amount of uncertainty in the current environment. But please leave me a comment down below to let me know what you think. Is it too late to begin stacking? It seems to me that most retail investors out there haven't even gotten started yet, so how could it be too late? But that's just my take. I'd love to hear what you have to say. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.